Hello traders, welcome to Trade Forex with Gabe. My name is Gabriel Ojimado and this is the weekly Forex Forecast. Today we'll be looking at market setups and interesting fundamentals we have for the week for October 30th through to November the 3rd. So as always, would like to start up by looking at the economic calendar and looking at what the fundamentals have to say. Interestingly, this week we have three interest rate decisions coming out from the Bank of Japan, the United States, the Federal Reserve, and the Bank of England. On Monday, we will see German prelim CPI data coming out, and on Tuesday, we will see interest rates decisions coming out from the BOJ, that's the Bank of Japan, where they'll be setting their monetary policy going into the month. And then we'll see employment cost index and CB consumer confidence data coming out from the United States. And then also we'll see data coming out from employment change and employment rates for NZD, that's New Zealand. On Wednesday, we will see FOMC data coming out where the Feds are expected to maintain the interest rate on 5.5 basis points. And also we will see ISM manufacturing PMI and the ADP non-farm employment change. While on Thursday, we expect to see the Bank of England to maintain official bank rate at 5.25 basis points. And also we'll see CPI data coming out from Switzerland. That's for Thursday. And on Friday, we will have the NFP news coming out on Friday. Also, we'll see data from employment change, unemployment rates coming out from Canada. So very high volatile week. So I would like us to plan our trade. Don't forget, we're still looking at risk-off sentiments in the market. And this week, having about four major data coming out from the market, so traders should be on the defensive. This is not one of those weeks to be a superhero trading. Well, let's jump into the chart and see exactly what the markets are saying, what the technicals are saying. We'll start off I made a mistake there. I have to take you through exactly what the setups are. So let's go back to the slides where we'll see what the currency strength data is giving us. Now, pretty much for the last 3 weeks, we have been seeing strength in the dollar and the safe haven assets such as gold, United States dollar, and the Swiss franc, and we're seeing the heavy hitting on commodity pairs such as NZD, Australian dollar, Canadian dollar. These are commodity pairs. Now, this last week we saw Swiss franc lost some strength, but then most of our trades was based on it. I will be walking you through those because most of the trades for this week, these pairs are still coming out to be the best pairs to trade into the week. So we have United States dollar still retaining its strength. Gold fantastically strong. If you traded gold last week, I trust you smile to the bank. Really nice setups we have there. Probably I'll take a look at it also at the end of this analysis. So into the week, I'm looking to my best long plays on a risk-off mode will be United States dollar, Swiss franc to the upside, and my best plays also going to the shorts will be Canadian dollar, NZD, Australian dollar. Now, Australian dollar gained some pair from last week, so I'll be showing you exactly also why I didn't include it here, but it is an interesting pair to trade into this week. So these are the best for me. These are the pairs with the biggest net change, but then my best trades will be based on NZD, Canadian dollar, and Swiss franc and United States dollar. So best trading pairs into this week. Thus, we have on Swiss franc pairs, you'll find out that these are same pairs we've been looking at for the last 3 weeks. They still turn out to be the best setups. Last week we had some rally, weakness on Swiss franc. Although we had the nice sell-off, it depends on how you traded it, but I will be walking you through those, giving you a better insight in case you traded it last week. Okay, so we will have interest rate decisions on Great Britain pound, so watch out to trade this when you're trading Great Britain pound against Swiss franc. Canadian dollar, Swiss franc, we didn't trade this last week, but this week it's coming out on the radar for us to look to go short on it. Australian dollar Swiss franc, nice, but it's on the last pair, and then NZD Swiss franc top pair. So these two are my best play in going into the week. And then looking at United States dollar pairs, I like Swiss NZD USD, but of course we have FOMC. So this interest rate decision is going to affect all of USD pairs, and of course on Friday we'll have NFP, which will be coming up. But I believe all our trades should have played out before NFP news. Okay, so these are the best pairs looking into the week, and let's now jump back into the technicals. All right, starting with NZD Swiss franc. On NZD Swiss franc, what we have here is we didn't have much of a volatility, but then if you look into it, we still have markets rallied into the week and sold off into the last low. You know, I told you each time I pull up my Fibonacci tools, I'm expecting some level of correction. So you can see the level of sell-off we had in the last 2 weeks, now 3 weeks, on NZD Swiss franc. So looking into the week, we had some rally, but almost instantly we sold off, but was unable to break the low from the previous week. So going into this week, we probably will see another rally or easing off of Swiss franc before we start to see that sell-off. So, but our target still remains the low from the previous weeks, and that is 0.5184 level. If you look closely here, we're having more like a tray inside down pattern, but then I'm not going to confirm that until if you would like to trade this, it's best to go down to lower time frames such as H1 or M30 and then look for price breaking those structures. Then that will serve like a confirmation that we're ready to sell off again. Okay, so this will be some of the best ways to find your entry when price begins to break the structure. You know, the major trend is the downtrend. So when price begins to break this temporal bullish structure we have here, then we can look to go in on this trade, and our target will be 0.5184 level. Okay, next on the list is Canadian dollar Swiss franc. So let's pull it out. CAD CHF, just a moment, there you are. All right, on CAD CHF, this is one trade that has been on the radar for a long time. You can see how far we've been ranging since February 2023. This market has pretty much gone nowhere if you're trading it or as a position trader. But then looking at it in this week, it's setting up to be one of the best textbook play outs we will see going into this week. So we can see massive sell-off. All right, you can see this massive sell-off, and now we have a consolidation. Let me see for how many weeks we had that. Okay, just pretty much for like a week plus. All right, you can see this consolidation, which is forming at the base of the lower boundary of this big time channel we have, a ranging channel that we have here. Now, textbooks tells us that once you have a downtrend, a sell-off, major sell-off, and you have this consolidation, you should expect the breakout to be from the lower boundary. Okay, so if we begin to see this breakout from the lower boundary on this smaller time frame, which is on H4, or let me put it on H1 so you can see it more clearly. All right, so you see here, we have this 1, 2, 3, 4, 5, 6. For 6 consecutive days, we have price pretty much traveling nowhere. So right now, when we begin to see this breakout from here, it also tells us that we're having a major breakout from this key level here, which you can find on the D1. All right. So if we see the breakouts from the lower boundary, then our target will be towards the 0.6433 level. Anything within this range down to 0.6408. This is on the short-term profit target. On the bigger longer term profit target, that means you have to take a distance measurement of on a D1 scale to find the profit. But I will give you, as the week rolls by, we will take it nice and slowly. So right now, and again, you have to also remember that we could see a retracement, and if we see a breakout from the upper boundary of this channel, then our next, I won't be looking to buy this trade at all. All right, I will just wait for it to break out, attain to this upper boundary here, all right, somewhere here, then this is where I'll be looking to go short again. So you have very nice triggers to enter this trade, which will be the breakout from these key levels, either the upper boundary or the lower boundary. Next on the list is Great Britain pound against Swiss franc, GBP Swiss franc here. So this was one trade we traded last week, and now you see I told you, when I pull up my Fibonacci tool, what I look to trade, I kind of trade in layers, yes? So I can enter the trade on 38 or 50 level or 61.8 level. So any of these three levels, sometimes I go all in on three of them and even to the final level here, so which could be my stop loss. All right, so if you traded this that way, you will still see that you close in profit because the first, second, third layers are excellent entry points, and you can see that we had that massive sell-off. Again, we now had the weakness in Swiss franc. We gave GBP this rally that we have here. But is this a bad sell-off? No. You have to understand this when you go to a daily time frame and you see that what we're experiencing here is just a major retest of the breakout from this bigger channel. All right. So if you look at it closely, you will see that what we are seeing is just a retest of the bigger channel, and exactly where that channel was, we see that price retested it, and now we're seeing an engulfing candle, swallow up the last bullish candle we had at this point. So I like this trade. I will be looking to go in on it again into this new week, and my target will be towards the 1.0806 level. Okay. And last on the list will be Australian dollar Swiss franc. Australian dollar Swiss franc. Just a moment. Let's locate where it's hiding. There you are. So on Australian dollar Swiss franc, on a bigger scale, bigger picture, good to always look at it from the bigger picture so you see exactly what forms the ideology behind the trade. So you'll see for a long term, we'll have the downward structure on this pair, and we've been selling off, okay, for the last 3 weeks. This has been a trade we're looking to sell off. All right. So, but if you look closely here, we're having something that looks more like an inverse head and shoulder. You see that? So we had this breaker. So it's more of a dilemma on this trade. So looking at it from this picture, we see the inverse head and shoulder. But then again, we have this key level being respected. Not just was it respected, but let me expand this. You will see we have a tree, an evening candle star formation. Okay, look at this bullish candle. We have this shooting star, and then we have a bearish candle engulfing them all. So what we have here is a candlestick pattern suggesting that price from this level should start going down. But then I would like to wait and see exactly how this plays out. Okay, if we're able to get any correction back into this place, I would like to re-enter this trade. Okay, but then we could also see price retracing all the way to 0.5781. But commodity pairs tend to take a big hit when we are on a risk-off mode, when traders are trading defensively, putting in their assets into safe haven assets. So I'm not seeing Australian dollar making any progress against the Swiss franc going into this week. So again, I'll be looking to go short on this pair. Especially we weren't able to break above the 100% Fibonacci level. So selling into from here, maybe taking a little loss. If price is able to break above this, then if I take a little loss here, then my next place of entry will be around the 0.5781 level. So let me take this out. Just wanted to draw your attention to this price action formation at that level. So I would like to sell into 0.5606, which corresponds to the last low we have here. Also, you can also adjust this to the last low we've had in the last 2 weeks, or you can also take it up here, which would be the last low for last week. Okay, no, last week's low was here. All right, so this is where I may be looking to take my profit. So also, I know some traders traded Euro Swiss franc. It would be good also to review that. Now, we had an interest rate decision on that, I think last week. So let me just take a quick review on that. We made we broke well above the high of last week after making a nice sell-off. Okay, look at that. We made a fantastic sell-off within, well, it went above the 61.8 Fibonacci ratio levels, but then if you entered within these layers 1, 2, 3, you know, wasn't able to break this high, then we made that nice sell-off. So all of this trade should have played out nicely for you before this rally. So with this rally, I'm staying off Euro Swiss franc for this week, just to see how this play out, because it's not even coming out under the radar. But then if you look at it closely again, you will see that inverse head and shoulder pattern here. All right, you will see that if you, let me try to make it more obvious for us to see. So with this inverse head and shoulder, what I'm expecting here is that if we continue to see a rally on Euro Swiss franc, then what this will imply is that we will see price rally up to 0.9604 level before we start seeing a crash again. Now, even if price gets to this level, it's still within the trading ideology, still within the trading plan, because this will correspond to the upper boundary of this channel. All right, you see that? So this will just be a temporal bullish setup we have here. So all is still setting up well. It's still not out of place, still within our parameters. Okay. All right, so that's it for Swiss franc pairs. Let's now move on to USD pairs. Starting up with NZD USD, which is one of my best into the week. Let's try to locate it. NZD USD. Now, this was also a trade, I think, from last week. Was a trade from last week where we're trading the breakout from this channel and also trading alongside the currency strength meter that we have. So if you look closely here, this is a very fantastic trade for me. I'm looking to go short on this as soon as market resumes into 0.5738 level, okay, because that will be the exact price profit target for the breakout of this channel. Next on the list is USD card. USD card, interesting. Let me locate it here. Just a moment. USD card. There you are. So USD card, what we have here with FOMC, we are, which is coming up on Wednesday, and the safe haven status of the USD, we're seeing price break out with momentum away from this channel. Now, can you see that? So price is already breaking away from this channel, and this is a daily time frame chart. So with this breakout, I'm expecting further buying or bullish move to the upside. First target will be 1.4008. Next is 1.4167. 1.4287, 1.4438. Now, this is the profit target for the breakout of this channel. So, but I'm not expecting price to achieve it in one sweep. That's about 500 pips. So we'll start with the first target, which is 1.4008, and we could have a retracement, guys. Never forget, if price breaks out from a key level of resistance with that momentum, we could see a conservative breakout. Conservative breakout implies that price should give us some correction, okay? Some correction, a retest before making it all the way back up to the target, okay? So put that in mind as you plan your trade. That's Canadian USD card. And last on the list is Australian dollar USD. Australian dollar USD. Just a moment. Let's locate it. There you are. Australian dollar USD. Interesting setup. Just nicely moving, following the rules of a downtrend. And going into the week, I would just like to see a sell-off where I don't believe price will rally above. You see that level? See that? Previous support turning resistance. So I don't believe price, even if we're having a correction into this level again, let me give you the level. That will be around 0.6395 level. So I don't believe price will break above that, which also corresponds to the upper boundary of this downward channel. So anything from there, I'm looking to sell into my key levels, and that's 0.6270, 0.6248, and lastly 0.6228. Whichever is convenient for you, take your profit at that level and stay away from all the volatility we will expect into the week. Don't forget, 3 major interest rate decisions on BOJ, Bank of Japan, the Federal, that's the USD, and the Bank of England. And then we have NFP this week. It's going to be a very volatile week, so don't expose your accounts to so much risk as you trade into the week. So until next week, we expect you to be profitable and plan your trades with good and proper money management or risk management. And if these videos have been helpful to you, don't forget to support it by liking, sharing it to other Forex traders. So until next week, this is it from my trading desk. Thank you and have a good week ahead. Bye-bye.